The put-call ratio has dipped below 0.75, and the label inside of our utility labels indicator has officially gone red. In today's video, I'll show you what that exactly means, how to see it for yourself, along with see what's happened every single time in the past 10 years when that put-call ratio has dipped below this key threshold. Now let's start first with understanding what's on the put-call chart right down here. Now on my put-call chart, I've loaded in not only the put-call ratio, but I've also loaded in a 10-period simple moving average of the put-call ratio. That's what's plotting this blue line that you see on the charts. And let me get rid of the edge signals indicator so you don't see any arrows first. Now this blue line helps give us a very simple and clean value of what is the put-call ratio currently doing. There's two key thresholds we look at. If it's greater than 1, that's where we put on our bullish hat. We think there's too many bears in the market. We're now looking for a reversal. If we're below the 0.75 threshold, we're looking for the reverse, where we put on our bearish hat. There's too many bulls in the market, and we're looking for the rug to get pulled from underneath the market. Now that's the overall idea, but the one thing you'll learn from today's video is the amount of time that the put-call ratio stays or can stay below these key thresholds can vary. So the idea here is you need to be a little bit more tactical in terms of timing when you get into this market if you're trying to play any of these reversals. Now let's start with first understanding what's happened before when the put-call ratio has dipped below this 0.75 threshold. An example, the most recent one, is earlier this year, and this was the end of June, beginning of July period. I've highlighted this with the circle right here, and you can see when that put-call ratio dips below the 0.75 threshold, stays below for quite some time. This was nearly 50 total days or 35 trading days, and it stayed below that level before finally breaking back inside of its zone. You can see what happens inside of the S&P. When we finally break back, we get the sell-off and the pullback we're looking for. These arrows are the edge signals indicator, and I think that's a good way to try and participate in these reversals if you are looking to do so. They help pinpoint where you might see price action, see some exhaustion selling. If you don't have access to the edge signals, you can also use another overbought, oversold confirmation indicator like the RSI. Now an example prior to 2023 was 2022, and this was March of 2022. If I come back here on our put-call ratio chart, you can see the ratio dip below 0.75, and you can see what happens when that happens. Here we have price action start to tell us that, hey, the put-call ratio is telling us there's a lot more calls than puts. We're looking for the rug to get pulled from underneath it. The edge signal tells us, hey, we're officially now in overbought territory, looking for sellers to come in. We chop around a little bit before ultimately seeing that selling activity kick into full gear. Now, before 2022, we have to go pre-COVID to see some examples of this. COVID really messed up the data here inside of the put-call ratio. We stayed below those 0.75 levels for a very long period of time. So if we come back to pre-COVID, we can see again the put-call ratio making a little bit more sense here, and there's some more examples for you to look at. The first one I have is the end of 2017, beginning of 2018. That's right here. You can see the put-call ratio dips below 0.75. You can see here this lasts a lot longer. Another example was June 2023, and then after that, October 2023. In both cases, you can see that the S&P has at least a little bit of reaction, and then sometimes a very big reaction from when the put-call ratio hits this level. And then outside of this 2018 mark, we have right before COVID. This was the end of 2019 and the beginning of 2020. And if I show you that inside of the put-call ratio here, you can see that right here, the end of 2019, beginning of 2020, when we have the put-call ratio one more time below our key thresholds. So I'm hoping from this video you have a few takeaways. There's two in particular that I had. One is the put-call ratio, or rather the label turning red, is not your sign to panic or anything of that sort. The amount of time that this label can stay red can vary, and typically it can be upwards of a month. Instead, and this is point number 2, this is your sign to start to be a little bit more cautious. I hope you found this video helpful. Take care, everyone. Good luck trading, and I'll see you in our next update.